hope you're having a lovely day. Um, yeah, I just want to kind of give a quick review on where things are. I've not been on for a couple of days. Currently have a live trade set up. You can see, I know the lines aren't very clear right now, but we've got some some DCAs set up. So our first DCA, we started the trade yesterday around here, and I fancied the 16700, the 16860, and then we've also got another DCA level up here at the 17124. These are all based around TA, kind of looking for fundamental levels. I mean, you can see here this has been a hard area to get through. However, yesterday's Asian session took us up. We got our first order filled and then our second order filled here. Couldn't quite reach our third order, and now we're averaged in at about the 1677 something. But we're in profit right now anyway. But we've built in some additional DCA positions up here. I think we're in around the 17. Let me just check on my phone actually where they are. So we've got 17124, which is this area here. We've got another one at 17500, and then we've got another one at 17850, and then finally at the 18k mark. Simply because there's a few things that are at play. We've also got one at 18557, which I believe, if we was to go onto any kind of a tear up, it would be a very short-lived kind of one, because if we look at, if we take our our local pivot high to our local pivot low, you can see around this 18500 right at the golden ratio here, which is why actually I wouldn't be too concerned if we come up to this level, because I think any kind of run up to the upside will be a short-lived one, and it would allow us to kind of average in our position, get a better return, and then when we do come back down, which I think anyone who thinks this is a bullish market at the moment is, well, it doesn't take an economic genius to work out that the bias is bearish at the moment. So we trade like this because why not? Most standard traders, and I don't mean that in a negative way, but most traders will trade the breakouts, and whilst that's fine, trading the breakouts are very short-lived, because most market makers who like to position their positions are expecting that, and when the breakout occurs, guess what? They go in the opposite direction to you. So, all the retailers jump on the bandwagon to try to get in, and then depending on whether you're scalping, maybe if you're scalping, it's okay. But if you are swing trading, or you're day trading, you're not gonna. It's not going to be a very long profitable strategy. Let's just say you may get one or two of these in, but more often than not, you will certainly get stopped out. So we've built our DCA positions up here, leveraging down as we're moving up. So quite a a decent leverage to start with, but we leverage out as we move forward, and we do that to protect our positions as the price starts to escalate away from us. But what that gives us is a further liquidation point, but it also gives us a better average entry as well as we move away. We've got our take profit around this area here, which is the 16,410. It's right at this level. Why? Interesting point is, look at the volume we had here in this 4-hour candle. But look at the size of that candle. What does that tell you? Well, that tells you massively that there's indecision around this area, and that's probably some institutional investor, some big whale is absorbing the shorts at this level. And that's a good point to raise, because when you start to see this movement, and you can see we wicked it here, we just missed it here, and we kind of just wicked it here. Someone is absorbed on this level. So if we do decide to come back down to this level and we break through it, we could expect a fairly decent move to the downside, but also respecting that we'd also get our take profit area filled as well, which would be nice. So we've built that in. We've looked at the you know, the potential retracement where we may go to, but like I say, it will be short lived, in my humble opinion. We, as we always do, we build out our fundamentals. So what can happen during the week that can affect the market. So these are just where we've mapped these out. Nothing happening too much today in terms of fundamentals. However, what you can never discount is kind of a, you know, a tweet or something that will affect it, like an FTX issue or another, you know, another exchange going bump, which wouldn't be out of the question at all. This Discord from my friend Lex here, by the way, is we have a Discord server where we talk all about trading. We factor in all of this stuff I'm talking about, and we figure out what we want to do as a team, and then we kind of all build this community together. So it's an awesome place to be. If you guys fancy jumping in, you know, feel free to check out the link in the description. We spend a majority of our time kind of, you know, talking all about trading and kind of ideas and whatnot. So as I say, feel free to do that. Let's have a quick look at what's going on. So what about we're just about to open with 2 minutes off the futures market opening up. Right now the yields are starting to head up a little bit. We've come down to this point here, which was 3.67%. Do look to be making a move to the upside, which is normally inversely correlated with risk assets like Bitcoin and Ethereum and things like that. So I'd expect, if we do continue to move up on the yields, that we would start to see downward momentum on Bitcoin. One thing to note lately though was this decorrelation between DXY and risk assets like Bitcoin. It feels like, even though usually what you tend to see is as the DXY goes down, Bitcoin goes up, and you know, DXY goes up, Bitcoin goes down. This kind of decorrelation where even though DXY is going down, so is Bitcoin, and if DXY is going up, so does Bitcoin, which is odd, because it's like what seems to be favoured now is where it used to be the dollar, and I say this is relatively short term, seems to be favouring gold at the moment. So got to keep our eyes on gold as well, I think, as a way to be thinking about that. Now, volume has been really poor lately, and we can look at the volatility at the moment. The volatility index is really poor, which is you know, looking at the volatility of the S&P 500. But normally what happens is when we start to see options expiring, volatility starts to really ramp up again. So right now the volatility is a little bit low. I'd expect that as we're starting to come into the tail end of the week and into the weekend. But we'll see how things move. As I say, I feel like we've got our setup. The other thing I'm keeping my eye on, so we just as a quick note, we got rejected. So we broke out of this original kind of ascending wedge. It's only slightly ascending, but we broke out of it. Now, normally when we break out of it, you'd expect it, you know, a big impulsive move to break out of it, but that never happened, and that's also a sign of weakness for the bulls. The volume was low, and when we did get volume, it really didn't move at all. So it's a strange time right now, but it's like the price doesn't want to move up, and it also doesn't want to move down. But I'm keeping my eye firmly on this kind of further descending part of the wedge, because it was used quite heavily up here. We had, you know, a big retest, came back and tested this area, but clearly we haven't tested this area at all since it came up. Now, you know, as I say before, if I just look at where are we? Let me just get rid of that a second. If we look at let's see, so let me just bring that down a second. Our local pivot high to the local pivot low. Now, and this is all based on time, so we don't know exactly when this will happen. But if we do move to the upside, you could see this correlating quite nicely on these points here. So you've got your 0.236. We've also got our 3382 level here. But if we get a fake out, we could maybe come and touch this 0.5, which would be perfect, because that's our, you know, our furthest DCA level. but it's an interesting point just to note, just to keep your eyes on as well. Um, you know, if we have a nice move to the upside within the next few hours, because futures is just starting to open, but theoretically we could come and hit it, you know, quite soon, which would be you know an ideal solution for me, even though it gets nervous because you're moving away from your position. But we are look, I mean, futures just opened, so yeah, it's half past. Now we're starting to see a little move to the downside. But we've always got to be careful on the brink session because you know it's market makers are starting to build the moves to alter these and turn them down to the opposite side. But right now we'll see. Let's see how we kind of see how the next kind of few hours play out. But let's see what's going on the also coming down on risk asset. The non-risk assets are starting to move down. What about the Dixie? Dixie's moving up, only slightly, but we'll see how that plays out. Nasdaq. Okay. Started to the downside, but it's whipped down and starting to come back up. S&P, probably similar. Let's see what the S&P is saying. Yeah. It's gone up and gone down. So the markets have literally only just opened 3 minutes, so we'll see how this plays out. But as I say, we've got our trade in, we've got our plan executed. Now it's just seeing how we move. So that's all it was. Just wanted to give an overview. I've not done any TA for a few days. I've not done it, you know, been on YouTube and whatnot. But let's see how it plays out, and we'll see how we go. That being said, I shall speak to you guys later, and bye for now.